Of September, and we're here for our market update. Just wanted to roll through what's going on for the day, talk about what we're seeing, what we're looking at, what the potential opportunities are here, and then I want to also review what's going on or what's what's happened over the previous month, just so you can get an idea of what is possible using a simple system with a quantifiable reason for doing what you do, using it the same way every day, every time, right? So anyway, let's jump into it. We just had some news, so let's pop over here, see what's going on. We had news come out just a few minutes ago. Pre-market, obviously, we've got the non-farm employment change. This is the biggie right here, and the employment rate came out. So unemployment rate 5.2. Kind of strange given the fact that there's no new jobs created. New employment, 235 on a forecast of 720, so significantly off the mark there. Kind of what we had seen on Wednesday with the ADP report that came out, but this is way off the mark. Market's reacting a little bit right now. This is all pre-market, so don't get antsy, don't get too excited about anything that's happening. Just let the market do what it does, and then come in, and you have two decisions to make today. Either A, you say, hey, I'm not going to trade. It's non-farm payroll Friday, which is typically a volatile day, and we're also coming into a holiday weekend. A lot of your big players aren't really on. This could be reactions with very limited volume on it right now. So do keep that in mind. The big shakeout probably won't occur until Tuesday, Wednesday of next week. So you have to decide, do you want to be part of it or not be part of it? Don't chase the market. Don't assign your own bias to what you think should happen based on the news, because what you think, what I think, what anybody out there in the world thinks should happen is irrelevant. We don't assign biases to the market. We let the market do what it does, and then we act accordingly. When you start assigning a bias to it, you automatically put these rose-colored glasses on, or filtering glasses, if you will, on. And what'll happen is anything that happens in the market that supports that bias that you put in the back of your mind, your subconscious is going to pick up on that and go, oh, that supports what I think is going to happen. And then you start taking trades. And at that point, you begin chasing the market, which isn't healthy for long-term success. What is healthy for long-term success is having a system, having a process that's quantifiable that you can execute the same way every time. Doesn't mean you trade every day. It just means that and it doesn't mean you're going to win every day. It just means that you've got a quantifiable reason for doing what you do, and it takes the bias out of the picture, which gives you that opportunity for consistency, because your bias can change day to day based on a lot of factors: what you ate, how well you sleep, whether you had woke up on the right side of bed or not, whether you just had a fight with your significant other, or whatever it might be. There's a lot of things that lead into that and creates this crazy level of subjectivity that is never consistent. So anyway, I don't want to go down that rabbit hole, but you know what I mean, right? Quantifiable reason for doing what you're doing is paramount to your success over the long term in trading. So enough about that. Let's just talk about what's happening for the day. So we've had a little bit of a sell-off here pre-market in the S&P. We had a big spike in gold over here on news. But again, we don't have all the market participants in the market yet. This is all done on limited volume. What we have to consider is, the stock market is a hedge against inflation. The stock market is designed to go up. Remember that. I started to mention this yesterday or maybe the day before. Another thing to consider: when the market starts to turn and go short, do you want to participate in shorts? Sometimes short opportunity just means stay off the trigger and wait until the market turns long again. There's a tendency up by the stairs, down by the elevator. So there's a tendency for short moves to be more volatile and more drastic, but they're also fairly short-lived, because the market by design is created to go up. It's created to create value for the investors. It's create value for the businesses. It's there to create value overall and hedge against inflation. So the trajectory typically is going to be long. There's going to be periods where the market pulls back and will pull back drastically because of the nature of money coming out down by the elevator, right? But if the market turns short, maybe that's just simply an opportunity for you to say, hey, I'm going to sit back and we just do nothing, go to cash and wait for the market to turn back long again based on what it's designed to do over the long term and how it's designed to work. So keep that in mind. Anyway, what do we have? I'm going off on all kinds of tangents today. Sorry about that. But what we're seeing right now is a little bit of reaction to the news. We'll see what really happens when the full market participants come online here in about 30 minutes, 45 minutes. We'll see what actually happens there. But don't let your bias weigh in to telling you what to do. Trade using quantifiable means. Right now, this is telling us we're still looking for long opportunities. 4-hour bias is long, 30-minute bias is long. We'd like to see a pullback. Pullbacks are healthy. Lower highs, lower lows, lower highs, lower lows, and then break back in the direction of that current market trend. I will say, and I've said this before, we've got kind of a bottom down here around 45.15. If this breaks down and closes below 45.15, just take your finger off the trigger. That might be a short-term reversal happening here. It might be the signal for a longer-term reversal. Maybe we short. I don't know. I mean, I don't want to prognosticate because that creates bias. But just know if it breaks down here below 45.15, if we start seeing this falling off, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and it closes below 45.15, just walk away. Go have a nice weekend. Take your day early. But for right now, until that happens, even if it pulls back here towards 45.15, but then reverses back in the direction of our market bias, we want to be in long because this is showing us that we still have a long market bias. All right. So that's the S&P. Over here on crude, what are we looking for on crude? Same thing, long market bias. We have a 4-hour that's long, 30 minutes long. We'd like to see this pull back. Pullbacks are healthy. Lower highs, lower lows, lower highs, lower lows. And then we'd like to see it break back in the direction of its current market trend, which is long. So if that happens, great. We'll be looking for long opportunities. Gold gave us a little bit of an opportunity yesterday. Lower high, lower low, lower high, lower low. It broke back in the direction of that market bias, but didn't really go anywhere. Picked up a couple of ticks, but didn't really take off until today on that news. But for right now, we're still looking for long opportunities. So we'd like to see this pull back and then break back long again to give us that opportunity to get in. So that's what we're looking for on today's market. I don't really have any breakouts on gold. I mean, gold's been in a pretty darn nice channel. I would say if it breaks down below 1810, you might just look at hanging back for the day. But for right now, it certainly is looking for long bias. So we'll continue to look at that. As far as recapping last month, let me just drag this over here for you, and we'll have a look at what was going on over the course of this past month. Just a few things to keep in mind. Well, let's do this first. Over the past month, we had quite a few trades that weren't able to be taken because the risk was higher than our risk parameters. Remember, we're basing this on a potential $10,000 account and never risking more than 5% on any given trade. Some significantly lower, some around 5%. But if it's above 5%, we don't trade it, right? We just say, oh, that risk is too much for us, and we move on. With that said, we had 5 trades on the S&P. We had 4 trades on crude, and we had 4 trades on gold. Overall, would have netted, potentially around 24% on your account, taking that very limited risk, not trading when risk is above what it needs to be, and letting the market do what it needs to do. This is the exact same thing we saw the previous month, and 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 the previous month before that, and so on and so forth. Overall, this is just keeping a running tally of where we are and what we've done over the past 8 full months right now, where we are currently for September, basing this on a $10,000 account, trading fixed lot sizes with a maximum risk of $500 per trade, which is about 5% of your overall account. So not too shabby for having a system that gives you very, very, very limited risk and gives you a quantifiable reason for being in the market. And I cannot stress that enough. I hear it all the time. People write to me and go, "Oh, Brian, I want to trade this, or I want to trade that." But it doesn't seem like this gives me the edge, enough of an edge. What people say when they say something doesn't give them enough of an edge is they want to win every trade. That's just stupid. I'm gonna tell you right now, it's stupid. Get that crap out of your head. You're never gonna win every trade. If you can be profitable, you can have a win rate of 40%. You can have a win rate of even lower than that. But I mean, 35%, 36% win rate, and you can still be a profitable trader. Get that crap about needing to win all the time out of your head and just do something that's freaking consistent that gives you a quantifiable reason for what you do every day. If it doesn't line up, you don't take a trade. If it is too much risk, you don't take a trade. Stack the odds in your favor by controlling your risk and doing something that gives you a reason for actually taking an action. All right? That's all it comes down to, guys. It's super easy. I say it's super easy. It's not. It's super easy to do that. It's super hard to get out of our own heads and truly allow ourselves to believe and realize that we don't need to win every trade. We don't need to be active every day. We don't need the more action we take, the more problems we create for ourselves, right? So just give yourself the opportunity to truly be successful by getting out of your own way. Follow something that gives you the opportunity to win more than you lose and gives you a quantifiable reason for doing it, right? And if the roadmap doesn't lead you to a trade that day, just move on, go enjoy your day. Come back the next day, do it again. All right. So anyway, I've been here for 12 minutes, much longer than I typically am, but I wanted to review that with you guys. Another solid month trading quantifiable reasons for doing what we're doing and taking limited action, but when we need to. All right. So anyway, that's it. Have a great day. Trade safe. Don't chase the market today. I'm just trying to look around my camera here to see what's going on in the marketplace. Don't chase the market today and let the market come to you and take action accordingly. All right.